Okay, so in this video, I'm going to go over why you should never trade without your pre-market levels. Now, trading without pre-market levels is pretty much like going on a road trip without a navigation system. You don't really know where you're going, and you probably just hope you'll get there in a couple of days. Well, you don't want to trade that way because you could be looking at a really big loss. Now, with your pre-market levels, it just informs you of what you want to do, when you want to do it, and how you want to do it. So let's get right into this video to see how I trade with pre-market levels for maximum success. I'm going to use an Apple chart on the 5-minute frame, and this gray shaded area shows price action during aftermarket hours of the day before and pre-market hours of the following day. I want to draw a level at the highest price point that price action attained. So I see it right here. And I want to draw a level at the lowest price action point, which is right there. I'm going to color code it to blue dotted lines. I'll do the same for the second point. And so every time during my trading day, when I see the blue dotted line, I'll know that those are the high points and the low points of price action during pre-market session. So I'm going to zoom out and pick up the charts for the previous day. So this is the chart of the previous day, and I'm going to do the same thing. I'm going to get the highest price point and draw a level. I'm going to give it a different color coding system. I'll make it blue, but I'll keep the continuous line. And I'll do the same for the lowest price point. Okay, so what I've done is I'm going to zoom out again. So what I've done is I've created a roadmap to better inform me during my trading day as to when to enter into a trade and when to exit. Zooming out, this is what it looks like. We have the bold lines clearly drawn, indicating high and low points of price action from the day before. And then we have the dotted lines indicating the high and low points of price action during the pre-market session. These lines will better inform me during my trading day as to where could be possible good entry and exit points. Now what I'm going to do in my simulator, I'm going to speed up price action as the trading day progresses. Now we're just going to wait for the trading day to begin. And we're going to see how the presence of these levels will better inform me as to whether I want to enter into a trade or not, and equally whether I should exit a trade or not. And the black section here shows the beginning of a trading day, and you're watching live price action. So the price opened higher than price level of previous day. So that's a good sign. The question is, can it break above the high that was made during the pre-market session? Once it breaks above the high made during pre-market session, as well as it already having broken above the high of the previous day, then this would be a good entry point into a long position. Now I have switched to a 1-minute time frame so I can better monitor price action in the event that I want to enter into a long position. I usually will wait for the second 1 minute candle to also break and stay above the pre-market level, just to ensure that it is indeed a true breakout. And here would be a point of entry into a long position. Now at this point, if I have two candles close below this level, then that would be a point at which I would consider exiting my long position. Right now, this candle has dropped below my dotted line level here, which was the high of my pre-market session. But I'm not going to exit the trade. If I was in a long position, I wouldn't exit the trade, not on just one candlestick. I will need to have a second candlestick confirm the drop below my price level. If this candlestick closes below my dotted blue price level, then I will exit the trade. But as we see, there looks like a good reversal going on. And if this candlestick can close above the dotted blue level, then I will stay in the trade. Okay, so this is going the way I want it to go. The point is that this second candlestick would be my confirmation to exit a trade. But as it is, it has reversed and it looks like I'd be staying in this trade a little longer. Zooming out, we can see here that this is the point at which I was hesitant over exiting the trade or not. This second green candle convinced me to stay in the trade. So though there was a little faltering, eventually price action did do what it was supposed to do and is now breaking above the previous day's high. Entering into a position after there's been a breakout of all the four previously drawn levels will always be your strongest entry point. So whether or not you would exit a trade on account of these red candles should be dependent on your other indicators. You never want to use just one indicator to determine whether you're going to enter into a trade or to exit a trade. Ultimately, price action blew past the pre-market high of the day as well as the previous day high, making this a pretty decent trade. Moving on to the end of trading day and looking over the trajectory of price action, this point and this point would have been perfect exit points. Of course, these pre-session price levels wouldn't be effective anymore because price action is so far away at this point. So to exit your long positions at this point or this point would be dependent on any other indicators that you're using. Well, that's it, folks. I hope this video has proven useful, and really I'm looking forward to you coming back and letting me know in the comment section below how this indicator has helped to improve your trading game. I certainly know it's helped to improve mine. Okay, now I'll see you guys on the next video.